Welcome to our first expert webinar of 2026. This is something that we are going to do very quickly to give some expert insights on different financial topics. Today's expert webinar is walking through our 2026 predictions. I am Stephen Brown. I am the COO and co-owner here at LedgerGurus. I'm also a CFO and co-owner of a e-commerce brand, Solely Toscana, and I've done a bunch of other things. With me, I have Lauren Mayar. Lauren is our Director of Service Delivery here at LedgerGurus. She is also launching our income tax practice. She launched our sales tax practice, and she also has a lot of things as well. We're not going to spend a lot of time talking about us. Let's talk about the predictions and what they mean to brands. So I have 10 predictions. We're going to go fast and furious. We'd love to take your questions as we go. We already covered some of these as part of a podcast that released last week. So I'm going to try and focus really on your questions as well as how they're relevant. And Lauren's going to keep me on track and ask me good questions. Okay, prediction number one, tariffs. And first of all, I should probably, the background, I'm not an economist, but I do read a lot. I do own a brand like many of you, and I am trying to understand how to plan my year. I believe prediction number one is I think we're at peak tariffs with some exceptions. The reason I would say that is I think what we've seen in the second half of 2025 was as tariffs got implemented, that they are going down where they're problematic. Now, where are there exceptions? I do think they're a tool that the current administration uses. Case in point, we saw this week that the Trump administration threatened anybody doing business with Iran with additional tariffs that included India. And so I do think there are certain, if there's a dust up politically, tariffs are going to be used as a tool and you could see spikes. But I do think as I'm planning for the year, I would say as they sit is probably what I would plan for. Now, do I think they're going to go away with the Supreme Court case? I don't. I was slightly optimistic, but what I've seen is they're going to be looking at other legal ways to keep the tariffs in place. So, and I don't think they're going to go, if they do go down, I don't think we'll see them go down to 2024 levels. So as the year looks, I would plan on tariffs as they stand and don't expect them to get worse unless you're working with a country that's on the bad side, but they could get better in certain cases.
Stephen, how have you seen tariffs impacting our customers?
Well, I think what we saw in 2025 was a lot of people moved inventory earlier, especially bigger companies. So I think we're really feeling the full impact of the tariffs. You know, we launched a tool last year, the tariff impact calculator. You can download that from our website to see what those impacts are. And I think we're really going to see the full impact of tariffs this year. So I would plan on, the cost increases for the full year and don't expect them to go down. Okay, prediction number two. I do think interest rates are a mixed bag. Now, there's two interest rates I want to talk about. The federal funds rate is what gets a lot of conversation. This is what is set by the U.S. Federal Reserve Bank, but there's some nuance. What they do is they set a rate that banks use to lend overnight, and there's a lot of pressure to go down. We've seen this week, there's a political battle going on. The executive branch is launching an investigation into the chair of the Federal Reserve. We do see that everybody's seeing that as a pressure to further drop rates. The Federal Reserve said they're going to drop the rates probably once this year. I think there's a desire from the executive branch for that to go down further. But here's the problem. Whether it goes down once or multiple times, the federal funds rate is really a driver for a couple of key things. So that's good if you have a line of credit that's based on the prime rate. The prime rate is usually based on the federal funds rate. You saw that go down last year. You should see it go down this year. If you have an SBA variable rate loan, credit card rates could go down. On this note, there is conversations around capping interest rates on credit cards, which could be good for consumers, which would be good for e-commerce businesses. Now, on the other hand, when you look at other types of interest rates, those are often tied to the 5 and 10-year Treasury bills. That's things like fixed lending, SBA fixed rate loans, I should say mortgages, not montages, mortgages. And I think that's a lot more uncertain, and I actually am a little bit pessimistic around those. We've seen those go down a bit in the last year and a half, but there's a lot of concern around the financial health of the United States on a longer trajectory, which would keep those rates higher and the products behind them higher. So there's a mixed bag. It could be good for consumers if credit card rates go down, but at the same time, mortgages and other types of consumer debt could pressure the consumer. For businesses, like again, mixed rates. If you've got good lines of credit based on the prime rate, that you should see further improvement.
Do SBA variable rates or fixed rate loans more common?
Well, if you look at like a an SBA loan, if you're buying a business, you're usually using the I think it's the 507 loans. Those tend to be variable rate loans, so that'll be good if you have one of those loans. There are other types of fixed rate loans for real estate, for equipment. I don't know if you're going to see a ton of improvement on those. So really, SBA has a number of lending products, and they're going to be impacted differently in my prediction. All right, number three, inflation remains sticky. I only see, I think we have a lot of with the tariffs. I do think that's an inflationary in nature. There's been a lot of conversation about why we haven't seen greater inflation from tariffs. But beyond that, I think there are some pressures with energy, with just general wages. Everybody's thinking that inflation is going to be sticky. It could go up even. I don't know if the current environment will create lower inflation, even though everybody wants it to be. The other thing is the big beautiful bill had a lot of stimulus in it. And so that, could put more money into the system. What does this mean for a seller? Well, for the consumer, there's going to be continued pressure on their wallet. For you, the seller, I would say price, we need to be looking at price increases at least annually, analyzing pricing, doing price adjustments at least annually. I think that is the way of the future. Gone are the days where you can keep prices for years at a time. That's prediction three. All right, let's talk about something. This is my most bullish prediction. A lot of talk about AI. I think this is a tremendous tailwind for e-commerce in three areas. Let's talk about the profits. Efficiencies from AI tech. If you're not really leaning into AI technology, you're missing out. I think the ability to do creative has gotten very efficient, which should mean if you're using agencies, you should get more creative than you've ever had, or you might be able to replace some of those roles. So I think marketing productivity is through the roof thanks to AI. And then I think general operational, you're seeing AI bleed into every technology stack, and that should drive down some costs and hopefully improve profits. Now, on the revenue side, there's two areas that I'm really excited about, and let's talk about some recent news. AI shopping and checkout. Since we released the podcast episode, there was a Shopify came out that they are launching their AI platform. This is they're going to make it so every store can be AI enabled and for AI checkout. If you haven't done AI shopping, it's fantastic. It's really cool going to ChatGPT, but it's really going into there and start doing research. And essentially, they're going to make it so you can do checkout through AI shopping onto your store. So they'll never go to your website, but they can still transact with you. And I'm really excited about this because there's so much time being spent in AI tools. If you're not leveraging, keeping track of what's going on in Shopify or Amazon, you should. Now, the interesting thing about Shopify is apparently they're going to enable this for non-Shopify stores. They're creating like a platform. I'm assuming you could hook up if you're a big commerce or some other store. So I'm really excited. If you haven't bought something through this, it's really interesting. My case study last summer is I had a bracket on my RV exhaust pipe that had broken. And I took a picture of it and I said, "What is this?" And it basically said, "That's a blah 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 bracket. Here's where you can buy it." I bought it through ChatGPT. It was really amazing. And so for me, this is a wave that brands should be riding, should be looking at. I'm really bullish on it. It's hard to say what it's going to turn into, but I would definitely position yourself to ride this wave. And then the third thing, which really hasn't emerged, but I really feel like will this year, is advertising on these AI chatbots. Again, there's a lot of eyeballs, a lot of time going in here. Everything I'm hearing is that they're working on advertising. When ChatGPT launches an ad platform, I would really be intrigued by that. The interesting thing, and I talked about this with my business partner with the brand I own, AI is kind of this weird in between Meta and Google, right? It's very deliberate when, if you're doing deliberate research. So does that cannibalize Google? Maybe. Does it cannibalize Meta? If you haven't Go ask, your ChatGPT account about yourself, and you'll be shocked at how well it understands you. If they can leverage that understanding of their users for targeting, it could be a huge opportunity.
When you say compete with Meta, it's like Facebook. Can you explain that a little bit more? I'm a little confused.
So Facebook, Instagram, right? Those are I think basically there's really two key advertising platforms. Meta, Facebook is the dominant one, and that's good for product discovery, for reaching customers that had no idea that they needed your product, right? Think about it. Facebook is always surfacing products you didn't know you needed or you didn't even never even heard of. And that's because they know a lot about you. AI also knows a lot about you. The more you interact with those chatbots, the more it gets to know about you in a much deeper level. Google tends to be more, surfacing product intent. Hey, I need a bracket for my IRV. Hey, I need a new hat. I need a new pair of shoes. And that's where I think the AI shopping and checkout will be a really key thing. But the advertising, I believe if it's done right, will be very comparable to what you have with Meta, where product discovery is available. So I would be on those waves if your teams aren't already. That's an opportunity you don't want to miss. This is my most bullish prediction.
Do you have recommendations on where someone should start? Because that's like I'm looking at that, it's a little overwhelming to think, got to attack it from all the fronts.
I've been putting a lot of stuff in our newsletter. Every time this stuff comes up, Shopify's got a lot of articles. There's a lot of articles on how to enable your store for AI shopping and checkout. And I would definitely be going down that path. Okay, next prediction, the prediction number 5. I believe that this is really the value economy on steroids. Like we've really been moving here for a couple of years. One of the conversations they have, there's an economic term called the K-shaped economy. And so if you think about a K, the lower leg is the lower end of the economy. So that's your lower consumers, and they're getting squeezed. They don't have investments, they don't have assets. They may be renting, not owning a home, so their housing prices are less fixed. And that leg of the economy, the conversation is getting squeezed a lot. The upper leg, on the other hand, is the one that's benefiting. Now, the thought I have is, as a value economy, is that are people that are on that upper leg starting to go to that lower leg? We're starting to see a lot of worry and concern in the professional class, the software people, the accountants, people where AI is potentially posing a threat to their jobs. So my argument is, with this mixed economy, value is more important than ever. That even elements of the upper K are feeling pressure, and messaging value, creating value with your products is going to be more important than ever. What does this mean? Well, it might mean packaging differently, creating bundles that create better value. But I think my thought process is you have to be really aware of what's going on, that you have a segment. So if you're selling to lower end consumers, that's a huge, huge risk. If you're selling to upper end consumers, you got to really be thoughtful about them. Are they going to be riding that growth wave, or could they slip down into the lower leg of the K and be under pressure? And so I think messaging value, realizing that people are under a lot of pressure from inflation, that just the general economy is a mixed bag, is really important. Okay, those are predictions 1 through 5. Let's go through 6 through 10. Haven't had any questions from the audience. I'd love to take them as we go. I'm going through this very quickly. These are designed to be quick webinars, so feel free to jump in and drop a question in the chat if you have one. Next prediction. I continue to feel a lot of optimism around some emerging channels. Now, I've talked about one. This is the AI shopping. I carved that out to its own part of its own prediction. TikTok Shop, if you didn't hear at the end of last year, is now as big as eBay. eBay is still a small portion of sales for most e-commerce sellers. I've yet to see somebody who's got a multi-million-dollar eBay business. I'm sure they're out there, but most of the time what we see as eBay is a secondary channel. But TikTok Shop is really defining social commerce and is paving the way. We've seen a lot of stabilization of TikTok Shop politically. A year ago, we're like, is it going to get banned? Now that's going away. Now there's looks like there's going to be a carve out of TikTok Shop as a US entity, so it's stabilized. And what they're doing there is really unique in terms of the in-product checkout. They've done a really seamless experience. They've done a really great job with influencers. Do I think this is going to overtake Amazon or, Shopify Meta as a sales channel? Not necessarily. I don't see that happening, but I do think you're going to continue to see a lot of traction, and for the right products and the right experiences. I am hearing about brands that are having a lot of traction. Again, I don't see anybody that we've worked with that's having a dominant revenue stream, but I do think this could become a new big leg. On the advertising front, I keep hearing good things about AppLovin. Again, there's a lot of attention. If you've used any apps that are very advertising heavy, you'll see like mobile games. The ads that they're surfacing are terrible. So there's a huge opportunity. AppLovin really started big, but has been coming down market. So you had to be spending a lot. They're continuing to open up to smaller and smaller ad budgets. And I continue to hear a lot of positive things. Other areas that I am keeping an eye on, but I don't know that have emerged, streaming ads. I think you're seeing all of the video streaming platforms moving to an advertising model in addition to a subscription model. And sometimes it's a little bit of both. Case in point, Amazon Prime Video. Now I have to pay extra if I don't want to get ads. And so again, I think a lot of these emerging channels in some cases will start towards larger customers and then they work their way down. That's what we're seeing with AppLovin. I expect something similar with streaming. TikTok Shop's a little bit different. I think that's a little bit more of a ground up approach. So I think they've really made that possible for anybody who's willing to get in there and deal with the suck. And I think AI shopping is the same thing. Those who are willing to put in the effort are going to have the opportunity. Which leads me to my next prediction. I feel like as sellers go, there's going to be winners and losers, but the defining factor is not going to be the size of your business, although that will give you some advantages. I really think it's going to be execution. And I really think there are a number of key areas. Now, for years, if you had a decent enough product and decent enough marketing, you could build an e-commerce business. But really, I think we're all going to have to lever up in a number of areas, including manufacturing or working with manufacturers, supply chain, finance, and tech. We're in a more sophisticated era of e-commerce than we were a few years ago. A few years ago, you could go outsource on Alibaba, set up an Amazon store or Shopify store, throw some money at Facebook, and you had a business. Not to say that that was easy, there was a lot of complexity. But now you're going to have to be really good at a lot of areas. It's not going to be enough to just ignore key areas of the business. Obviously here, I feel like finance is really important. I feel like those that are leaning in, learning to be sophisticated with finance are going to be on the winning side. But again, there's a number of areas, and I would say lean in. Don't just assume, if you're using an agency, don't just assume they know what they're doing. Learn what you need to learn about marketing, hold them accountable. Same thing with your manufacturing, your supply chain. Lean into those areas. It's hard. You're smart. You can do it. Those who do, I think, will win. Those that don't, I'm concerned about. Okay, next prediction. Ad costs will likely rise. Now, this is an easy prediction, and I have an asterisk here because I want to talk about some negatives and positives. On the negative side, ad costs always rise. You should assume they will rise. And there are some out there that are theorizing that with AI, creating more ads and pushing ad spend higher faster will be easier. Here are my counters to that. So one of the things we see in the brand that I've owned is, yes, we've seen ad costs rise, CPMs in particular, but we are seeing better conversions. So on the other side, AI could improve efficiency. AI ad platforms will create more competition. So wouldn't we love it if ChatGPT created this killer ad platform and pushed Meta to continue to get back to the glory days? Like, an interesting idea that me and my partner talked about is, what if CPMs do go up, but conversions also go up? So the ad platforms get more money, but we get the right type of impressions. We're not just getting any impressions. We're getting impressions for the right customers who are actually going to pay and buy product. That could be a win-win. Now, a little bit of a bear case, but it's a bear bull. Like, if there is, for some reason, an economic downturn, there's almost always a drop in ad costs. The downside of that is there's usually a downturn in consumer purchasing. So overall, I would say plan on higher ad costs, but your ad efficiency might still stay the same, and it could even improve depending on how things play out. As I look at the year, I'd plan on somewhat comparable efficiency with the hope that we see improvements with AI and competition. Okay, I'm going to make a case that inventory, and this is a little bit of a derivative of the winners and losers execution, but I would make a case that inventory optimization is critical. We've been going down this path for years. It's been painful as to try and drive better inventory accounting and management. A lot of our peers in the industry run away from it because it's really messy. It's hard because it's really hard for sellers to do inventory management well. Inventory is typically the biggest asset on the balance sheet. With tariffs, we've seen a lot of pressure on costs. So I would argue that the industry as a whole needs to do a better job. We need to do a better job at demand planning. Over ordering could be really painful. We need to start treating inventory as inventory management as a strategic capability. So if you haven't already, I would say lean into this. You need to level up your game this year more than ever because of the financial implications of carrying too much inventory, of ordering too much inventory, the impacts of tariffs, which are volatile. We just got to get smarter about inventory in general, and it's something I would say is a strategic capability.
Stephen, would you say then that everyone needs an IMS?
I think as a firm, we have generally said yes, everybody should be using an IMS, an inventory management system. And it's not easy, right? You have to work to make that system work well. But yes, I think inventory management, using an inventory management system is critical. Okay, my last prediction. The US economy. I'm calling it the meh economy. Now I'm going to give some bulls and bears. My bear case. Well, some of us we talked about inflation, affordability, right? There's a lot of pressure, tariffs. These are the reasons why I feel a little pessimistic toward the economy. The reason I'm not going full bear in my prediction is there's some reasons to be optimistic as well. My bull case is, and this is where I'd love to hear from Lauren, who's been digging into income tax. The big beautiful bill was a huge bill, and there's a lot of stimulatory provisions there. I mean, just give us a few things that you think are really good for businesses and consumers, Lauren.
Well, the accelerated depreciation is really going to free up some cash for our customers, right? I mean, that was such a great thing that the big beautiful bill did. Another big thing is the state tax deduction was increased from 10,000 to 40,000. So that was another great thing. I think overall it's going to be a mixed bag, but I think where our clients are going to see the most effect is through the accelerated depreciation.
So it's good for businesses. There are some things for consumers, no tax on tips. So there are some stimulatory elements of the big beautiful bill, which also could be inflation.
The no tax on tips, it's not going to have a very big effect. It really is just on the difference. So it's a very, very small portion that's not going to be taxed.
AI, we've talked about that. And then I think we're in a overall deregulatory environment. It's hard in e-commerce land to say that this administration is business friendly because it has felt really bad for anybody selling imported goods. But in general, I think this administration is more business friendly than we saw with the previous administration. I would expect continued policies. You know, we saw some things that were like a year ago, they were talking about business ownership information registration. That went away. That means less time doing crap like that, more time focusing on your business. Add it all up, I feel like it's kind of meh. So I'm not overly optimistic. I'm not overly pessimistic. I'm just like, hey, I think it could be an interesting economy. There are some really smart people that are saying they could see huge growth this year. The question is, who will it impact? Add it all up. This is what we've got. What are you going to do with this, right? Well, I'm using this information to plan out my year, to try and be strategic, to think about my financing, to think about how aggressively I'm ordering, to think about how, what things I'm tackling. Again, these are predictions. I'm not going to be perfectly right, but use them to help you plan a better year. Hopefully this is helpful. If you have any questions, I'd love to stick around and take them. We're going to do these quick 30-minute webinars every month. Next month, we're going to dive in and talk about e-commerce finance KPIs. Talk about the KPIs that I watch, with my clients, with my businesses, what they mean, how to improve them. So join us on February 19th. We'll be here again.
I dropped the link in the chat, Stephen, so everyone will have it.
With that, I'll take any final questions on any of the predictions, how I'm thinking about that, how I'm planning my businesses, the customers that I'm supporting with my services. Thank you for joining. We'll wrap things up and catch you next month.
Thanks,
All right.
Stephen.
Okay. Talk to you next time.